Good morning. I'm Peter Milios from the Finance News Network. Stocks rallied on Wednesday, rebounding from a dismal past 3 months after the Federal Reserve kept interest rates unchanged for a second consecutive time, leading investors to think that the central bank would stay put for the rest of the year. The Fed kept rates in a range of 5.25% to 5.5%, as widely expected. The central bank also said economic activity expanded at a strong pace in the third quarter. In previous remarks, it noted the economy was growing at a solid pace. However, Fed Chair Jerome Powell at the post-decision press conference would not rule out a hike next month, saying that the idea that it would be difficult to raise rates after pausing for 2 meetings was wrong. Overall, the Dow Jones Industrial Average advanced 0.67%, the S&P 500 climbed about 1.1%, and the Nasdaq Composite added 1.64%. Semiconductor companies Advanced Micro Devices and Micron Technology added 9.7% and 3.8% respectively. Nvidia shares were up 3%. Bond yields slid following the rate decision and Treasury bond sale plans, boosting equities. The 10-year Treasury yield fell to just below the 4.8% level on Wednesday after a move about 5% in October that spooked markets. Meanwhile, the 2-year Treasury yield dipped under 5%. The US Treasury plans to auction $112 billion in debt amid rising government debt concerns, matching market expectations. Economic data suggests a cooling economy, while Wall Street grapples with a tough October marked by yield concerns and a 3-month losing streak in major indexes. Turning to US sectors, technology was the best performer following the Fed's decision to leave rates unchanged. Energy was the worst performer. Turning to commodities, Citi predicts that the iron ore price could reach $130 per tonne by year-end if China increases its policy stimulus, citing recent price rally fueled by hopes of a stronger Chinese demand and government support for infrastructure activity, particularly by Vale SA, a major iron ore producer. China is contemplating copper restrictions to curb overcapacity and emissions, similar to other commodities. However, the country's heavy reliance on imported copper ore may pose risks as smelting capacity continues to grow. Due to the impact of climate change and a severe drought, the Panama Canal will significantly reduce the number of daily ship crossings. Previously at around 36 ships per day, the limit has already been reduced to 25 and will gradually decrease to just 18 by February next year, affecting global trade as over 3% of it passes through the canal. Turning to the Australian landscape, the SPI futures are pointing to a 0.8% gain. Thank you for listening.